Hello and welcome. As today's date comes in that of Tuesday, it is the 29th day of September 2020. My name is Derek. This is the Money Charts channel. Take a look at silver, and like always, all bets, trades, and of the like within each his own risk and their own reward. Within the price right now, as at 10:07 a.m. Eastern Time, the price is $24.06, and whatever price spot price, this price you got. Let's just say silver. I'm going to be putting the XAG/USD. I also got the silver spot at the one that looks like right here, SI, and it's pretty much the same. Now there was like differential in prices within the two, but that was like way back when, months ago, and that was like I said, maybe an indicator silver would go up. I don't know if it was or not. I mean, obviously the price has done such within the play. So as I am looking at this market, and I want to focus within the 18 average, we have been seeing just a phenomenal move where the price has come close to tripling from the Rudy Gobert COVID lows. And I use a Rudy Gobert incident because everything started crashing the day he basically tested positive in an NBA game, which thus stopped seasons of all sports for several months. And the market conditions right off the bat, the next day, everything was just crashing, like every market. So that's why I call it the Rudy Gobert lows, because everything happened then. And if you're watching Rudy, he got popular. Anyway, with that being said, from the time that it recovered, it came into the 18 average, and from the first point, it was an instant success. So there was none of the resisting the 18 lows, resisting the highs, leaving the lows and pulling back. None of that was in play. And when we look at this further, we supported, and then we kept going. So within such, what action was done below the 18 average of lowest prices? And in here, correctionary phase, it held and stayed above it, so it really didn't go below it. And this, really can't count that. Especially, why does the 18 front weighted beat like a 22 period regular or a whatever exponential of this number? I just picked 18 in one day almost a decade ago, and front weighted and have never changed it. So with that being said, I've liked using it, and now I see after supporting it in here, it had phenomenal support within it, but then had excitation of it. Thus, now we have a newly declining 18 with a key low, key high. I'll be doing Fibonacci, and that's most certainly going to be one of the two levels in which I'm going to be focusing on. The other will be from this low to whatever this high happens to be, but I'm really not looking for that yet. So as it goes, let's go ahead and do some math. The math I'd like to do, I take the highest prices, and that would come in that of $29.92. And then the lowest price in here, that would come in at that of $11.64. So I take 2,992 and 11.64. You can put the decimals in, but within this calculator I make automatically rounds it. So I want to know what the decimal prices are. I divide it by that, and the number will be very close to 3, telling you what the X move happens to be from low to high. And then I'm gonna put the exponent to, and the calculator will do 0.764, 76.4, which is a Fibonacci number, 61.8. 38.2 and 23.6. I also do the upside, which I'm not going to use. That's 1.618. I'm not going to use the downside either. That's negative 0.618. So the first one is $23.94. Now, if you want to do a number above that, it's like the 85.4%, which is 76.4% multiplied 6 point. Actually, no, it's 23.1 subtract 23.6% multiply 61.8%. That should be 85.4. Anyway, 23.94 is where we're looking at. That would be the first level, and we'll put a line there. So when I do it, I like to put it from where a key level is, so you can do it from, like, say, the high. So let's put the line starting here. And usually I put these lines in, I don't break them until I need to, and then I'll just say later on, oh, it was only luck that it did whatever. That's just whatever. That just seems to happen. Now it did pierce nicely below it. So we did have a little bit of support in here. So at a stage, just by looking at this now, we're in a spot where, well, we supported here originally right off the bat. I mean, it was a perfect piercing little extra on August the 12th. And then unable to make it to previous high or hitting a pierce, noticeable large pierce less on the high of September the 1st. And then correcting successfully but unable to break out and then failing after a decent correction time on the 21st. And we can see in here, we can shorten the time frame out. Now, how did we have? We obviously had 2 complete days on the 21st and 22nd when we supported that key fib level. Then it broke that point on the 23rd. Established this level of support here at 2184. That's why the lows, the high from here, so 30 divided by 21.84, which is, 2/3 or whatever, and then to the root of those same numbers, you can do Fibonacci from that level to that level. I think that's going to be important as well. So that's maybe a third one, but as it goes within this, it is now resisting it after several days of having a noticeable pierce less extra. Now, if I look at this on the hourly, I want to take a look on how the support played. Within, we can even just see just recently here on the resistance side on the 20-hour stamp last night and the 19 stamp as well, that it resisted it practically perfect, successfully corrected within the 18 average of lows, piercing above where it came from in this area here. And that could be just a pain in the ass. If you're like, yeah, I'm going to put a buy order ready for 23.33 and you miss. I mean, that's just part of the game. But anyway, as it goes, we managed to see a situation, a very good bullish candle at the 4 stamp. And then a good follow through and then another similar type of good candle. And now it just looks as if this is, after resisting it the first time, ready to consolidate and break out to what a next key level would be. So you'd have to try to find some sort of key upside side stages. So I think, yeah, maybe it would be important to have Fibonacci from this high to this low. You can, and then I have to decide there's 3 lows and one I'm going to rule out completely. The low for sure would be the 22 low change or whatever that number happens to be. I'm ruling out this high here on September the 1st. So the 2 highs I want to look at if I'm going to do Fibonacci for this move upcoming, I'm either going to take this high of $29.81 or I'm going to take the breakdown spot, which would be where it broke down from somewhere, maybe this high here at that 1 o'clock stamp, maybe this point in here where it broke down at that. I mean, either one of those two. I would probably tend towards the high of 29.80 in doing such. But for now, I'm going to continue on just placing the lines towards the downside. If there's any type of resistance, because once it comes down, even if we don't resist here, we could easily come to where we were before, go to the 18 average and resist 61.8, 76 from the levels I just talked about. And then if you start to roll over, if the 24.16 level doesn't hold, well, at that stage, I'll be looking forward to make a 38.2% correction to the downside. Now, and that's on the downside, which is why within the mathematics, I'm looking at the 0.618. Because from low to high, taking 61.8% of the move to this level would take you, well, to that number, which is, of course, 38.2, to the downside, which is where it would be going. So that's the price point of $20.86, which to me is, I think, the intended target I think this thing is going to go to. So, yeah, and it could take a decent amount of time. You hit your 24 change. It could take like a month or 2 or so to even get there. And the silver market has been consistently for years upon years having just a whole bunch of consistently going up so fast and down so fast moves. And I can get to that in this video because, well, I'm on the silver charts and I pretty much know its history very, very well. So 2086, so that was close, 5 cents off. Okay. And I'm only and I normally would put I normally wouldn't put all 4 in, but I put in the next 3. I'm going to, just in case. I don't expect there to, and it could be a 61.8% correction, and if there is, that would be 16 3/5 or 16.69 according to this, and not as close here with the 17. But that's something I'm pretty good at. Just by looking at, once you'll see enough charts like I have, I can look at any, if it's a good enough log chart scaling anyway, I can take a look at it and know pretty much exactly where the 61.8, to a very good degree, where the 61, 8, and 30, these two numbers would be. And so for this move from the April lows to this highs to fail, it has to break down below 1669. The deepest you really want to correct is piercing below this and holding and staying above 1670. So we can go below. Let's have a move that maybe goes down, maybe goes to like 1504 or whatever. And then within the next maybe periods, it goes back up to say 1762. Maybe we come back and support again, and then we lift off from there. And yeah, that's holding and staying above that level. And maybe we do support like a little below it, like 1630 or something, 1620, which is what I've been calling for so long, piercing extra. So there is that one there. So let's go ahead and get another one just because I want to put different lines in. I mean, this I'm gonna start off by doing the one that I said in advance. So in this case here, I mean, we got different numbers here, but not by much, but whatever. I'll use these ones on this case. 2986 is the number, which is about a 6-cent differential. And in the real world, that's just how, I mean, cryptos is even could be worse than that when you talk about the arbitrage from one exchange to another. And then we have this low here. And what I want to do is I kind of want to look at both of them and then see which ones in the early stages looks better. So especially if you look at, yeah, that's one of the better ways of doing it. 21 2/3 is the low. So the 23.6 is, well, first we'd have to get to the 23 2/3. How did that work out? And I'm doing this like raw broadcast. I mean, I haven't looked at this stuff yet, but it doesn't take me long to figure this stuff out. Okay, so 23.36. Holy yeah, SHIT. That's normal. I mean, come on. So that's pretty good so far. It pierced less. But here's the deal, though. It's usually they pierce extra. And if I reduce the Fibonacci number from a lower high, then the Fibonacci at 23.6 would probably be down to 22.97, which technically would be more likely and more common. I mean, I guess you could say the next one you would expect to not, but like pierce extra if I continue going with this. So I'm going to go with this breakout, the breakout high. Like we'll do 27.22 instead. So now the 23 comes in at 22.86. I don't like it. It congests, though. No, you know what? The other one's better. No, I'm going to do the other one. It just, I mean, it was pretty much more of an exact hit. That one didn't show me the nice normal pierce. I mean, I can't say normal because I've seen that look before. 29.86 again. So let's put in 23.36. And then the next one would be a 38.2% number at 24.5, basically 24.49. And not quite there yet, so we take a look at this on the 15. Well, as it goes, I mean, look at the resistance here. That's pretty damn nice. Is this an exact hit by chance? Not. I don't usually. I see enough of them, but not too many. It's pretty hard for that to happen. I don't think it is. It looks like it's about maybe a pierce penny extra, or a fraction penny higher. Okay, and then I don't even know what the fraction number is to actually. So I have to, if I round it to the right number, because I got 23.36 with an incorrect fraction of the whatever the last decimal is. So the high is 23.3526. So I mean, $0.75 of a dollar off, pierce lower. Okay, it is what it is. So after it, yeah, so I'm going to go with this one. So yeah, I see the two. I mean, heck, this one looked much better than the other one. So if I want to go with this one further forward, yeah. So here we have a situation amongst this congestion. And this is what you successfully see quite often. You hit this level and you resist it. I mean, just like that, you have some sort of resistance. And this is weak resistance because you congested it with not much of a pullback and you came back pretty much to where you came from in here. And that's not even a 61.8. 61 would be like almost a 61.8 down. So it wasn't the greatest of resistance, but it was sure enough big in time. Markets can correct one of two ways of price and time. And that's pretty much a good time correction. A little bit of price down here, but keywords were just a little bit. And then you resist in this, nice, and establish much support. And then if you were to take this data in here, and this is what I'd like to do out of a chart program, I just want to circle this. And I want to see just this data, including this, wow, this is showing strength. This is just a beautiful setup. I got to talk about that. But I would like to just push a button, highlight this, and I want to see this. Now, this is a 15-minute time frame, so this is a major shortener. So I need to see this like on the 1 minute and stuff like that. But I'd like just to see, show me this here on the one, and because I want to see the moves in here. I'm not going to do it, but that's just a good option. But as it goes, as we can see, just look at these periods here from the 11:15 all the way up to here at the 12:45 say a lot. Because you have, again, the second hit of resistance from way back when after many periods. Then you have a little bit of a pullback, you hit it again, another pullback, pretty much a matching little piercing higher. And then you did all this. I mean, that's just the telltale sign of high probability of exactly what happened was going to happen. And then piercing a little bit higher. Oh, this would suck for your buy order maybe unless you've got it in, of course. Because that's one strategy in markets. You break out, at least I think anyway, in any type of chart. You break a key level of this and you see it breaking. Oh, I want to get in. And now you're like, oh, well, let's just put a buy order back to where we came from, which of course was in this area. So the Fibonacci number you'd have would be 2336. And then my usual play means if I were to play it, I'd probably get it because I usually do a little bit extra on the safe side just in case something like this happens. And knowing that if it pierces lower, I get my buy order say at, say, 2338.9. And it goes down to 2303, and then it does this. No big deal because it's a good buy. Anyway, from this point, the market has continued to move. And even as it stands now, as I'm doing this, 10:24 a.m. Eastern Time, this baby looks, we have a hit in here. We have the support. And, of course, we're not supposed to top here because key Fibonacci is 2449. So this is telling me here, why would I want to sell here? No. Like I say, if I did do the buy there, my sell order is like, oh, this is a tough one because, I mean, it just pierces extra so often. But if it's going to do stuff like this, and I don't know why I'm changing the word, but not like anyone cares. But anyway, why you just like this is why, again, I mean, if I have a sell order here at like 2330 or whatever, but yeah, if I were to sell this fib point, I'd be putting one at like 2444 or 2445. That'd be my type of play, even though I realize it's probably almost guaranteed. I hate to use those words. Locked. I know those are words that are bad in the sports gambling business, and that's the industry I come from. But it seems high probability. And I like that word so much better than lock. That's a much better word. Words. 2458, 2460 is going to happen today. Or into tomorrow, but probably today. Okay. Let's just put the rest of these lines in. Then after you hit the 2450 level, what do we do now? And that's a question mark. I don't know. Because what next in the spot of you? What I like to do is adjust to the message of the market, see what happens, because I realize it's either we're going to go back to the key level before, which is this line, or we're going to go up to the next line. And I haven't drawn in. But after 2449 comes 2641. So if he can violate, or if he can get past that, then that would be the next intended target, which is a 61 point, and the big one, 61.8% Fibonacci retracement. For this down move to be a successful real move, it has to hold and stay below that level. If it violates it, fails it, you see price action breaking it, that tells you it's a failed move, a selling that is. Oftentimes from failed moves can create fast moves in the opposite direction as well. So I'd be looking for it to break previous high resistance if I see it holding and staying above this key fib point. And then breaking out towards this point, because I think there's a good chance that it's going to keep going higher. I mean, maybe it might go lower than higher, but eventually it's going to go higher. I mean, I'm so damn confident this thing is going to 3 figures and into 4. That's me. And into 4. I wasn't as damn confident years and years ago about the 4, and I talked about that. I used to have a sign over a decade ago at my old place, but of $1,000 silver, that is. But I do think it's coming. So eventually it's going to happen. Now, whether this is the low before we break, whether the low will come back down to 18 or 20, we'll see. But again, I'll put the number in now, 76.4. And this is just if it breaks to 26.41 short term, I'm looking for 27 2/3. That's really all it would come down to. I don't expect much resistance area forced amongst those levels. If I'm looking for Fibonacci upside, then what I want to do in a situation like this is if we can successfully correct, because we've had even an okay amount below the 18 average of lows on the daily. If we can successfully correct this, especially if it's a longer correction, either through price and or time, and we break the $30 high, then what I do to calculate where we're probably going to go is I'm going to take high divided by low, and then I'm going to get the numbers from the other one, the 61.8% retracement. I'm going to do this high divided by this number here, the 61.8% down move, to the root of the 1.618, multiply that low again. I'm going to do that. So let's go ahead and get these numbers because I got them calculated already. So I'm going to do, okay, let's find the high. Actually, no, the high is this one here. Yeah, it's the 29.53 handle. And the down move here is 16.69. So whatever the up target is where I think this is going to go on a break of the 30, and that level is about 42. So does 42 make sense in any other situations within combining it with other Fibonacci's? Well, it's not really. I mean, that one kind of like an oddball one. I'd be going on the 35 number. But even then, that's really, for what it's worth, none of it. Even on the 42, if it looks good. Because here's the deal. As mentioned, if it can violate 61.8%, how do you do? Which is what it's looking to do. Then, yeah. So the move from the $50 level down to here, to me, is looking more and more like it's, and I know it's going to be a failed move. So I see it failing in here. I see it holding above 28 and staying above or breaking out nicely above it. Then I'm expecting a move up to the 50 point of semi-weak resistance depending on how it gets there. Because if this thing just shoots right up to 50 ASAP kind of deal, I mean, it's one of those who knows, oh boy, this could get wild kind of situations. I'll most certainly be saying that in the videos coming up then when it happens, if and when that happens. I got to say if because not when. Because a straight up shit, I'm not saying is going to happen, but just could. But in that situation, you hit the $50, 48 ballpark, even 44, 45, even 42 is good enough. If it hits in those areas, then it's going to be, okay, yeah, we could have weak resistance, but by any means, we could have like a 4-day, 1-day, 10-day, 20-day drop, like 48 to 30. That's going to be no surprise to me. Or 26, whatever, go down this 28 fib and pierce extra. Oh, easy. But that still isn't all that strong, and it's probably going to regroup and recover from it. But at the same point, it could be like, oh, we're at like the 48, and you're expecting resistance, and you don't see it. Oh, and maybe next thing you know, 3 weeks later, the thing is $88. Now, those are just things that you got to keep in mind that are likely. If A situation happens, what's going to most likely happen? If B situation happens, what's going to happen? And C, so on, so forth. Thank you for tuning in. Have yourself a great day. Bye-bye.